Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, October 29th, 2019. We are again in the final hour of the trading day. I mention this each day, but I believe that the prices as close as you can get them to the end of the day are the most valid prices to make your buying and selling decisions from, and that is because during the normal part of the day, just during the regular day, the trading day, you have the algorithms, you have the day traders, they're battling it out, they're fighting it out. I consider it a lot of noise. At the end of the day, you have the large market makers and the large financial institutions come in with size and move the market in the direction that they feel is the most appropriate price. And so that is why I am primarily an end of day trader. I wait till the end of the day, preferably as close as I can to the close of the day, to make my buying and selling decisions from. So anyway, hope everyone is doing well out there. Thank you so much for coming today. As always, I appreciate it. I appreciate you coming and investing your time. I hope you're learning something. It's helping you with your trading and investing. So the market today, a little bit of a snoozer. The Dow is down 19 points at the moment. The NASDAQ is down 42 points, so that's down quite a bit more. It's down about 0.5%, and the S&P is down 1.74 cents, 0.06% down. So we have a big day tomorrow. We have the Fed results as far as whether or not they're going to reduce interest rates tomorrow. The market seems about 90% that they are going to reduce interest rates by a quarter point. If they were to reduce it by more, it would be probably most likely bullish for the market. If they did not reduce interest rates, it would be very negative for the markets. But we don't know what's going to happen. In addition, on tomorrow after the close, we have Apple's earnings. So tomorrow is going to be quite a interesting day for a variety of reasons. And generally when there's big announcements coming up that could move the market in significant ways, I get a little extra conservative. So I don't think it's a bad idea when you have major announcements, especially Fed announcements, to be a little conservative. So anyway, let's take a look, make sure everybody can hear me. Hey, looks like we can. Hey, John, how you doing? Thank you, sir, for coming. I hope you're doing well. Appreciate it. Hey, Johnny, what's going on? Jackson says, morning, Greg, about 70% through the rule. Enjoy the read. Isn't that a great book? Jackson's talking about The Rule by Larry Hite, and it's a fantastic book. And if you're 70% of the way through, Jackson, you'll realize that the crux of the book is about asymmetrical leverage, or putting yourself in a position where if you're wrong small, and if you're right, you have the potential for a lot of upside. And so that's what I really try to use in my trading, like the crossovers, right? The crossovers don't win a lot, but when they win, they can win really big. And if they lose, they generally lose pretty small. And then also, identifying a support level, taking your entry as close as you can to that support level, so that if you're wrong small. And if you're right, you have, 2, 3, 4 times the potential to the upside. And that's what it takes to be a profitable trader. You have to have big wins, small wins, scratch trades or break-even trades, and small losses. So that's the equation for profitable trading. Unfortunately, most people take small wins and they let their losers run, which is exactly the opposite of what you should do. So anyway, great lesson last night, Jackson. You did really well. Proud of you. You're taking this very serious. Some really good questions on your end. And so anyway, I hope you're learning a lot, and I look forward to our call tomorrow again. So, all right, let's take a look here. All right. So the plan for today, everybody, as usual, first of all, we're going to go ahead and run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, what method I used to buy them, and then how I'm going to manage them going forward, either to the upside or the downside. After that, we're going to spend a few minutes on trader psychology. It's a very important topic, so I do like to talk about it each day, so we'll get into that after we take a look at my positions. Then we're going to go through my entire watch list. We're going to go through each stock one by one. We're going to take a look at the support, resistance levels, indicators like RSI, MACD, moving averages, ATR channels. I look at indicators on the chart as potential groups of buyers. And if you want a stock to go up, you have to be in the company as many other buyers as possible. So if I can look and see a confluence of signals or a confluence of indicators lining up, I look at that as multiple groups of buyers. And in my opinion, that is the best way to improve your chances to have a profitable trade, is if you get in to a trade when a bunch of other people are getting into a trade, as long as the risk to reward's there. Sometimes, you'll have a good setup, you'll have a confluence of indicators, but the risk to reward might not be so great. The how high it is in the channel, it may be a little bit overbought, and so that's a filter where everything looks great but you can't take the trade. There's some overrides sometimes that you have to do, where like, okay, I have 4 indicators lining up, but it's close to the 65 RSI or 70 RSI, and it's just a little too high, and in those cases I just pass on those trades. So we'll go through, we'll see if there's anything interesting that fits my criteria, both as far as indicators go, risk to reward, and if they're overbought or oversold. So we'll factor that all in. The other thing you have to factor in is correlation. Do I already have 2 technology stocks and I want to buy a third one? That may not be a good idea to have too much correlation in one industry. And then also factoring in, like I just mentioned, factoring in, major market announcements. So, this is what we have to factor all these things in before we make a decision. And even then, if everything lines up, it still doesn't mean it's going to be a winner, right? But it fits your plan. You want to trade your plan, take the plan. It's going to win or it's not. There's nothing you can do about it. You cannot control it. But the only thing you can control is, what your position size is and when you get out. And ideally, you want to get out if you're wrong with a small loss, and be patient and let a trade work for you and hope to get a big gain as long as it's moving your way. So and then after that, after the market closes, if anybody has any questions, please let me know. Any questions, comments, if you'd like me to take a look at any particular stocks, I'm happy to give you my humble opinion on those. And if there is a particular stock that you think would be of value to the group to take a look at before the market closes, feel free to put it in the chat. Maybe, put a star by it or an asterisk by it, so I know it's a little bit more time sensitive. Okay, so that is the plan for today. So hold tight. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thanks a lot. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, Steve Burns. Hey, buddy, how you doing, my friend? Good to see you, Steve, and thank you so much for coming by. Always appreciate you being here. It's always an honor, privilege to have you here. I'm always excited to see you, and I know everyone else is, so I really appreciate that. Steve says, hey, Greg, looks like the market is waiting on Fed quarter point cut tomorrow. Yep, it is. And, along with Apple's earnings and the Fed quarter point cut tomorrow, should be interesting. A lot of times, the market will anticipate something happening and they will price in that event happening. And so, you've heard the saying, buy the rumor, sell the fact. And sometimes, not all the times, of course, we don't know. People will anticipate something happening, especially if it seems like it's a for sure thing. The market will go up and up and up in anticipation of that. And sometimes they'll come out with it and it will go down. In novice trader school, well, they had good earnings and it went down. Why is that? Or they had bad earnings and it went up. Why is that? Or the Fed cut rates. That should be good, but the market went down. So, it's always a game. It's always hard to figure out these macroeconomic things. And I guess the truth is you really don't know, and that's why I trade based upon the price action, not upon what my opinions are going to be or my guesses. I'll tell you what, my guesses are pretty good in the big picture, but just my guesses and opinions, but I'm generally early. If I think something's low enough, it generally goes down more. If I think something's high enough, it generally keeps going up. So in the long run, it does, the one that was too low does turn up, the one that was too high does turn down, but timing, of course, is very important. So I'm fairly good at it in the long run, but in the short run, not so good at it. So I don't trade that way. I base upon what the market and what the price action is telling me. Hey, Kurt, how you doing? Good to see you, sir. Yeah, hey, sorry about that. Yeah, on ETF replay, there's, there's a lot of stocks they just don't cover. So I put those in there and just blank screen. So generally just big, well-followed monster stocks and ETFs and indexes. So anyway, but in the future, if you have any more, please let me know. Okay. And, glad you're being patient with your trading. We've run up pretty far here and, we need to be patient. I know it seems exciting and things are high and all that stuff, but generally in my experience, buying at these levels is not a good risk to reward ratio. So Kurt says, all good, no problem. All right, well, listen, my charts are working. Finally, I think I am done with this. This has been like a 2.5 month odyssey, which has been really, really difficult. I've used Trade Navigator for over 20 years. I really like them. I'm so used to them. I can't really even think about using somebody else, but boy, I've had problems with this data feed. They switched data providers, and so there was just, all this downtime in between, which I guess would have been too bad, but when you're doing a podcast and sharing the screen, it really makes things difficult. So I tell you what, this feels so nice to be able to have all the symbols I can look at, no more having to do with the Schwab chart, although I appreciate Schwab having that chart because it got us through. Steve Burns says, TrendSpider back testing has all stocks. Oh, well, maybe that's something to think about, Kurt. Is taking a look at TrendSpider. I've heard a lot of good things about it. Steve says a lot of good things about it. Christopher Uhl was on yesterday. He says a lot of good things about it. I see a lot of good stuff on Twitter. So that's good. That's good. Maybe you should take a look at that, Kurt. All right. Well, speaking of taking a look at things, this is so sweet, be able to use these charts. All right. So I did buy gold back here on the 25th of October. I bought it when the 5 EMA crossed over the 20, the 5 EMA crossed over the 20 EMA on a closing basis. This is a good back test. This is a good long-term back-tested, quantified, profitable approach to trading gold. But like I just mentioned, these trend trades and these crossovers, they don't work all the time. They generally have a winning percentage of less than 50%, but the losses are generally small and the wins can be outsized, AKA Larry Height, asymmetrical leverage. So, Jackson, this is what we're talking about. Getting in, if we're wrong as we are today, because it looks like the 5 is going to close below the 20, we take it off for a small loss. It's just over a 1% loss. So, that's fine within the parameters. But if this caught a trend, it could have gone up 2, 3, 4% or higher to the upside. And that's where your asymmetrical risk and reward comes in. So it looks like the 5 is going to close below the 20 today. That is my signal to get out. Do I want to get out of a trade? humans are always hopeful. They're like, well, wow, it bounced off the 1 ATR. Maybe it's going to go right back up. And it might go right back up tomorrow and I'll be, dang it, I should have held it. But it's not the correct answer. The correct answer is, before you get into a trade, decide what your plan is. My plan was I'm getting in. If the 5 crosses over the 20, I'm getting out when the 5 crosses underneath the 20. And I'm going to stick with the plan, take the small loss. Russell 2000. So Jackson, just a good example here of an asymmetrical trade. I did buy IWM back here on the 15th of October when we closed above the 200-day moving average. We also had a MACD crossover. So this is what I'm talking about as far as looking for a confluence of signals. Breaking back above the 200 is important. It happened in the value zone, so it was not too extended in the channel. If I was wrong and the next day it closed just even a penny below the 200-day moving average, I would get out. That is your asymmetrical win-to-loss ratio. If I'm wrong, I'm most likely wrong small. If I'm right, I have the potential for a nice trade, and this is exactly what happened. So did buy this back here at 150, 139. Right now it's at 156.95. As you guys know, I do like to phase out and take profits each day when the market goes a certain amount in my direction. Take a few chips off the table. And so, any big bar up here, I took profits, took profits, took profits, took profits yesterday, and did hit one profit target today, literally at the top. And the way that I phase out, the closer I get to my ultimate profit target, the larger percentage of shares. So, I'm going to keep this. It did close above the third ATR channel, which is very strong. This blue line up here is the 70 RSI. So I am going to be looking to exit the remaining amount of these shares. If tomorrow we go up and test this 70 and then close back below it, that would be my signal to get out. Conversely, if we close below the previous day's low, that would also be my signal to get out. But this is a good example of an asymmetrical trade where my loss most likely technically would have been quite small. I mean, it could have gone way down, of course, but on average, it's probably going to be fairly small loss with any close below the 200. But if I'm fortunate to catch a trend, which I did, then that gives me a good risk to reward. And important, I took this trade. The reason I took it here was because it was in the value zone. You have the easiest movements from the value zone up to the third ATR channel to the upside, or in the value zone down to the negative third ATR channel to the downside. As you get closer to the third ATR channel, the rubber band starts to pull pretty tight. 90% of prices do fail around the third ATR channel, and they do bounce around the negative third ATR channel. So, have the crossover, MACD crossover, that's one indicator. We have a slight close above the 200, so if I'm wrong small, and gives me some nice room within the channel to move before I run into resistance. So this has been a great trade. Did hit one profit target today. Again, if we reject the 70 RSI to the upside, I will go ahead and get out. If we have a close below the previous day's low, I will get out. And I have a feeling tomorrow, one way or the other, that is going to happen. Mount Doji, hey buddy, what's going on? Good to see you, sir. What's going on with your trades, Mount Doji? I love Mount Doji's trades. Mount Doji says, I need to get me Trend Spider. Good. Yeah, I've heard a lot of good things about it, but I do love stock charts. Yep, stock charts good too. Hey Marco, what's going on, brother? Good to see you. Thank you for tuning in today, as always from Europe. I appreciate that. Hey Frank, what's going on? Hello, Greg and all. Have been watching Nike near the 50, no position yet. I was going to mention that today when I go through the charts. And, Frank, we are at the 50-day moving average, but one other thing to take a look at as we are at, the previous support of the previous range. That previous range was resistance. We broke out of it. Now we're coming back down. So you have a confluence pretty close of the 50-day moving average on Nike and also support of that previous resistance, because what was once resistance generally becomes support. So we'll take a look at that when we go through. All right. Silver. So I did buy silver back here on the 24th of October. I bought it when the 5 EMA crossed over the 20 EMA. This is another good back-tested approach, similar to gold. This one has reacted a little bit differently than gold, but I did buy it here at 1665. Next morning, opened up for a birthday present. It gapped way up. I got out of about 40% of my position way right up here near the top, which was excellent because then it sold off, and it's been going down ever since. But that's, sometimes that's one of the nice benefits of having of phasing out. You'll wake up where you have a huge gap and you get out of 40% of your trade just overnight. So very profitable trade so far. We are back here slightly over where I entered it, but of course, because I took 40% profit up here, it's a profitable trade. So the 5 is still above the 20, unlike gold, so I will be holding this. This is a mechanical trade, no discretion involved in this trade. I'm just going to hold, phase out as it keeps going my way until I'm out of shares, or conversely, if the 5 crosses back below the 20, that will be my signal to exit the trade. So this one's been a great trade so far. Even though it looks like it's gone down, but we gapped out of so much of the position up here. So anyway, this one looks fine. I'm definitely going to still hold silver going forward. All right, the all famous SPY trade. Uh-oh. Okay, there we go. So listen, I know I mention this every day, but in case we have some new viewers, I do want to go over this. I do buy the SPY every single day, the SPY ETF. At the end of the day, I sell it very first thing the next morning, and I do it every single day. And why would I do this? It has nothing to do with technicals, has nothing to do with anything on the charts. It has to do with results of a backtest. This is from Lizanne Saunders at Bespoke Invest on Twitter. I believe Lizanne Saunders is the Chief Investment Officer for Charles Schwab. So with this approach, you have two options. Option number one is you could buy the SPY at the open each day and then sell it at the close each day. If you did this every day, buy at the open, sell at the close, buy at the open, sell at the close. If you did this every day since 1993, you'd return a negative 13.9% return for your troubles. However, if you did the opposite, which is what I do each day, and buy the SPY at the close each day and then sell it first thing the next morning. So buy at the close, sell next morning, buy at the close, sell the next morning. If you did this every day since 1993, you'd actually return a positive 634.2% for your troubles. Pretty good, pretty big difference. Past performance is no guarantee of future results. Of course, that's true. That's true for any trading approach. Just because it worked in the past does not mean it's going to work in the future. But if I'm going to put money to work, I would rather put it into something that has worked in the past compared to something that did not work in the past, like hiring somebody that's always been a good employee, does good work. It doesn't mean in the future he's going to, but it's more likely that he is going to, compared to somebody that never showed up for work, didn't do a good job. Doesn't mean he won't do a good job in the future, but if you had to bet on the two, which one would you bet on? I bet on the one that did well in the past. So I like this chart. The blue is the buy in the afternoon, sell in the morning. The orange is buy in the morning, sell in the afternoon. It's a perfect representation of having an edge, letting it play out over time. Taking the long view of trading, letting it play out, doesn't mean it goes straight up. There's ups and downs, there's bumps and bruises along the road. You have uptrends, downtrends. You're going to have retracements. You're going to have drawdown in your capital. So it's important to always position size correctly, so that if you do run into a downward move on any trading approach that you're using, it doesn't hurt you too much emotionally and financially. So anyway, that is why I buy the SPY each day, and I did buy it yesterday at 303.30. Sold it first thing this morning for 303.03. So I did lose 27 cents overnight per share. That's fine. It's a small loss. I can deal with that. I can tell you I've been using this since February 26th of this year, and yesterday I hit an all-time high using this approach. It's been really profitable. I got to tell you, it doesn't mean in the future it's going to be, but so far it's been really, really nicely profitable. So small loss today on the SPY, or overnight on the SPY. I will be buying this again today at the end and then selling it first thing tomorrow morning. All right, so Walmart's our stinker here. I guess I should have stayed short. I did short it up here, did make some money to the downside, but I did cover the short. I did buy this yesterday. We moved up out of the channel. We moved down back into the value zone. We started to move sideways here. We caught some support. Yesterday we triggered a V2. V2 has 3 bars, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1's close. My stop is halfway of the washout bar. This is the washout bar. Day 2 is always the washout bar. You have to wash out the previous day's low. So a close under halfway of this bar here is my stop. Obviously, it looks like we're going to close well underneath the stop. So I will be getting out of this, taking the loss. You know, it's unfortunate. It's no fun to take losses, but you know, you have to get used to them, guys. I mean, you're going to lose 30, 40, 50% of all the trades that you make. You make 100 trades, you're going to lose 30, 40, or 50 of those trades. So, you know, you can't get upset about losses. You can't let them, you know, get on your nerves. They're just part of trading. Just like in any business, you buy something, you sell something. There's a cost of good. You have to buy from somebody what you're selling to make a profit, right? And in trading, your cost of goods are your losses. They're going to happen. They're no fun, but you know, do your best to keep them at a minimum. My plan was take the trade. It was a good setup. If there's a close below halfway of this washout bar, which is 50%, it should hold some Fibonacci support number here at the 50, but it did not. So I am going to go ahead, lock in this loss at the end of the day. It's an unfortunate one, but that's how it goes. I wish we could make money. I wish we could make money every single day, but honestly, it just does not work like that. And if you can wrap your head around that, be okay with losses, it's going to make your trading a lot better. All right, so QQQ, again, this is another example of a good asymmetrical leverage trade. It's 520 EMA crossover. The 5 crossed over the 20. The entry signal came when the price was in the value zone, which I like. I will take it up to about 1.5 ATRs, but if I have any crossover that happens 2 ATRs, more than 1.5 ATRs or higher, I usually just pass because the rubber band's getting pulled a little bit tight. But I did buy this back here on the 111, I'm sorry, dyslexic, 191.11 back on the 11th of October. Because of the 5 crossing over the 20. If the 5 crossed under the 20, that would be my exit signal. This is a completely mechanical trade, no discretion involved. And so you can see it's moved up really nicely. Every time we've, you know, had kind of some of these big up thrust bars, I did phase out. I am out of about 65, I think, off the top of my head. I'm out of about 65% of this trade, all at profitable levels. So if it does come crashing down tomorrow and the 5 crosses back below the 20, that will be my signal to get out of the stock. But fortunately, having locked in these profits up here, it will, if it does go down, it will mitigate the loss. And most likely it wouldn't even be a loss because I have so few shares left. And you know, phased out of the profitable ones up here. So anyway, no profit targets today. Did hit 1 or 2, I can't remember, yesterday. You know, surprise, surprise, we got up to the 3rd ATR channel and we found some resistance. So you know, I know when the news, when we're moving up into these levels, you turn on the news, it seems like you should buy, right? It really seems like you should buy up here, but generally, that's why I don't buy up here, because, you know, 9 out of 10 times, 10 out of 100 times, it's going to go higher, but the other times it's going to find resistance here at this 3rd ATR channel. So that's why I don't initiate a new trade. So anyway, it's been a really nice profitable trade so far, but it's mechanical. So the 5 crosses back below the 20, that will be my exit signal. If it continues up, I will just continue to phase out of shares as it moves up my way, and until I'm out of shares. So that is that. I think we got everything. Mount Doji says, no new positions yesterday. I sold LL, thankfully. Oh, that's right. Let's take a look. Aha. Very good. You know, 90% of your the moves up to the third ATR channel are going to get rejected. About 80% are going to get rejected at the second ATR channel, and then I can't remember actually off the top of my head what percent get rejected at the one, but you know, you get to the one ATR channel, that's one standard deviation away from the mean. So you are going to find some resistance here. It's going to get greater here, and it's going to get greater here. So let's see, did you sell all of it? You did. Fantastic, my friend. Nice trade, nice trade. Took this V2, right? We were in the value zone, lower high, washed out that low. Here it was a one-day wonder, and you got in, I don't know, made 3, maybe more % on that. Fantastic, bud. Giorgio, hey, how you doing, Giorgio? Message retracted. Okay, well, thank you for coming by, and if you have any questions or anything I can help you with, Giorgio, please let me know. Okay. All right. So, listen, this is the time of the day that I like to do a little bit on trader psychology. It's very important, in my opinion. It's the greatest skill that you can ever learn in trading. It's important to learn about technicals, resistance, all these kind of things. Yes, it is, but the real skill in trading does not come from your technical analysis. It comes from the skill of being able to control your emotions through good times and bad. And I know I say this every day, guys, but it is true. It's the #1 skill you can learn. So there's a lot of good Twitter channels out there that talk about trading psychology, talk about the importance of controlling your emotions and what a skill it is. And one of them is Akil Stokes, at Akil Stokes RTM. He has a fantastic Twitter channel. He does little videos every day, talks about trader psychology. I can't recommend him enough. So if you've not subscribed to him, subscribe to him on Twitter and read and listen to his videos each day. They're short and they make a lot of sense. But Akil says the reality of trading is that it is a slow, dreadful grind with flashes of extremely great moments. The secret to success is surviving long enough to capture those great moments. And it's 100% true. You guys have heard me talk about this a million times. You know, trading is a skill. In order to develop a skill, you have to do it for a long time. Like anything, you play the guitar, you're not going to be good at playing guitar in 5 days, right? It takes years. And it's the same with trading. You know, so to develop that skill of trading, you have to do it. You have to get a lot of reps underneath your belt. But the only way that you're going to get that experience and get those reps is by staying in the game and not losing all your money. And so that circles back to position size. In my opinion, position size is like the most important thing. It doesn't matter how bad of a trader you are. If you position size correctly and conservatively, even if you're losing, you're not going to lose a lot, and you're going to continue to be able to work on your progress as a trader. You know, when it comes to trading, everybody, position size is the only thing you have control of. The only thing. That and when you buy and when you sell. Those are the two things. After that, the market could gap horribly against you. And, you know, if that, you have no control over that. The only thing you have control over is how much of something you're going to buy and when you're going to buy it. After that, it's up to the market, literally. But he's right. You know, it's a slow, dreadful grind with flashes of extremely great moments. A lot of times of the year, guys, you're just breaking even, 1 step forward, 1 step back, maybe 2 step forward, 1 step back. You know, it can be a grind. It would be nice if we could just make money every day and have our equity curve just go straight up like that, but that's not how it works. But he is right. You know, every once in a while, you're going to have some big, huge moves. And honestly, at the end of the year, a lot of those are going to make up the majority of your profits. So anyway, it's very true. It's exactly the same for poker players. You know, a lot of, they grind it out, and then 1 or 2, 3 big nights a month, they'll have a big win, and that's where they'll make their monthly money. So anyway, check out Akil Stokes, at Akil Stokes RTM on Twitter, and read his postings. But thank you for a great post, guys. Akil, I appreciate that. And guys, you know, remember what he said. It's a slow grind with moments of flashes of extremely great moments, and you have to keep yourself in the game in order for those to come. And the only way you're going to keep yourself in the game is to keep your money, not blow up your account. And in my opinion, the best way to do that is position size conservatively. Me personally, the maximum I take is a 10% position size on any one trade. So thank you, Akil. All right. Jackson says, I have a good friend watching your podcast today. Peter, I've got a lot out of Greg's podcast. Hope you will too. Oh, thank you, Jackson. And thank you, Peter. Hope you enjoy and hope you keep coming back. Steve says, Greg, do you see a lot of confluence with your third ATR channel and the 70 RSI? On what stock, Steve? Do you see a lot of confluence with your ATR value zone in the 30 RSI? Oh, wait. Do you see a lot of confluence with your third ATR channel? Yeah, the third ATR channel and the 70 RSI. Steve, which are you saying in general, or are we looking at a particular stock? Oh, just overall. Well, we're getting pretty, I mean, if we look at the indexes, here we have the SPY. It looks like it was maybe 65 earlier at the third ATR channel. So definitely I'm seeing mid to high 60s at the third ATR channel right now on a lot of the indexes. If we look at IWM, here we are at the third ATR channel at a mid 60s. The Qs yesterday were at 65 RSI at the third channel. So yeah, I think a lot of the indexes, if we look at the SPY, we just looked at the SPY. Yeah, mid 60s RSI at the third ATR channel. Steve says, in general, over time in your experience. Well, maybe I'm not understanding the question, but not all the time, but right now I am seeing those convergences. And as you know, of course, you factor in the third ATR channel and you factor in the 70. Anytime you have a confluence of positive signals or negative signals, and I would consider this negative. That is what I thought. Seems like the signals are similar in the time I've been watching you. Yeah. Frank says, it's not so much FOMO as it is slim pickings in a strong market. That's true. It's a strong market, and it's a really good way to say it. There are slim pickings. So, in situations like this, I'm just going to defer and not take a lot of positions. Greg was talking about the value zone, and I was subconsciously thinking about it yesterday in my one-on-one. Bing He, hey, how you doing, Bing He? That's our friend from Singapore. SH, how does one draw an ATR channel? So in your charts, what you want to do is you want to go to your indicators, and it's under either ATR channel or a Keltner channel. I put 3 to the top, 3 to the bottom. So I put a 1 standard deviation ATR channel, 2 and 3, and a -1, 2, and 3. Steve says, I think the 70 RSI zone also holds resistance 90% of the time in my experience. So there you go. You get a 70 RSI and you also get a third ATR channel, and they both resist about 90% of the time. So that's generally why I like to take my profits there or get out of a position. All right, well, let's get moving. Apple, surprise, down today. I didn't think it was possible that this stock could go down. We do have earnings tomorrow. That should be interesting. We did go above the 70 RSI yesterday. Well above the 70 RSI, and today we've lost it. We're to 66. We also lost the third ATR channel. Does that mean I want to get in here short? No, it doesn't, because I can tell you, even if we didn't have earnings, there are a lot of people that missed out on this move that are lurking down here. They're waiting down here to get some kind of signal to buy. So I would not want to short this first move down. Most likely it's going to come down. It will find some buyers here. It might have some kind of attempted rally back counter. Went blank there for a second. Some kind of reaction rally back up here. Then if it fails, if we have a lower high that fails, that might be if you're into shorting. But I'm not. I don't want to really talk about shorting on Apple because I don't want to do it here, especially with earnings. But I was just pointing that out. But I don't want to mess with Apple at all until after earnings, till I find out what's going on. Adobe, we did get pretty low here. We've rallied here. We're at a 48.27 RSI, so that means we did get up to the 50. Jackson, you can tell 48.22, so you can just look at this and you can go, okay, this did reject the 50 at some point today. So nothing for me on Adobe. Advanced Micro Devices has earnings after the bell. Again, I don't want to get involved in betting on earnings. So, a lot of these stocks after earnings, some have really gone up, some have really gone down. It's a gamble. Best way to save your money is not get in front of earnings, So, first priority always is to conserve your current capital, not to make more capital. It's to conserve your current capital. Secondary is to make money. And the number one way, in my opinion, to stay out of huge, quick moves against you is to get out in front of earnings. Amazon, this was an earnings, we gapped down. We had this huge reversal back up. Currently, it's a 49.50 for RSI. So, you go from the 30s back up to the 50s. That 50 is going to act as some resistance. That's exactly what's happening here. So nothing on Amazon. Boeing having a nice day today. Nothing here though. We're still under the 200-day moving average. No crossovers, nothing there. So I'd like to see this move into the value zone, sell off for a day or two, have a higher low V1, V2, and that's where I would be interested in Boeing. Caterpillar, very, very strong, very high, 70 RSI above the third ATR channel. Just too high for me up here. It's just way too high for me. I need some kind of pullback. I need some kind of dip to buy. It doesn't offer a good risk to reward ratio up there. The SPY, the diamonds, this is the Dow. We've had resistance at these previous highs here. Yesterday we tried to go higher, close lower. Today we tried to go higher, close lower. I'm looking for a pullback into value V1 or V2 entry to possibly get me long. Walt Disney down. Keeps going down. I'm looking very carefully here at this 200-day moving average and with the confluence of the -1 ATR channel. This would be a good confluence of signals here, give me a good risk to reward. If I could get it as close as possible to the 200-day moving average. If it breaks through the 200-day moving average to the downside, I would also be looking down here at the confluence of the third ATR channel and the 250-day moving average, and it would be closer to the 30 RSI. So I'm just going to be patient. We do have earnings coming up, but it's not quite there yet. My plan is look at it here, look at it here. It's not there yet, so nothing to do. Conversely, if we have a 10 cross back over the 50, that is a good long-term back-tested approach, and I would consider that. So sometimes you have to wait for the stock to go down more before you buy, or it has to go up more before you buy. Etsy, okay, well, I did take Etsy back here on the 24th when we had this pullback into value, nice V1. Next day it did go up. We did hit one profit target. Yesterday gapped up a little higher, closed below halfway of the washout bar. So I did get out yesterday, thankfully, at the last second. You guys remember it was like literally the last second. Because it broke the support of where I wanted it to break. And luckily I did, because the thing is down 5% today. So nothing on Etsy. We have earnings coming up tomorrow morning. How are we doing on time? All right, Ford continuing to stay under the 200-day, which is not a good sign. Really nothing there. Facebook did gap up nicely, but has reversed. If you guys know what V1s or V2s are, and especially Jackson, we have a V1 to the downside, right? This is the negative V1, and we rejected this previous high. So we have earnings coming out tomorrow. Nothing to do on Facebook until after earnings. Five below. Now we're making a lower high. Here we had a high, we came into value. Now we're making a lower high. So, and for me to get involved in a V1 or V2 here, I'd have to wash out these previous lows. And Mount Doji knows that because he's very adept at seeing these things. So we have a lower high. If we have a lower high, then in order for me to take a V1 or V2, it has to wash out the previous lows. So nothing here. I would see how it would react around the 200-day moving average. That might be an interesting spot. Gold miners. We do have a nice higher low here. Here we move up, we come down again. Today we wash out yesterday's low, close above yesterday's close. This is a nice higher low V1, but here's the issue, guys. We're at a 48.46 RSI. You know, when I figure out my risk to rewards, I have to figure them to the upside. Well, my upside's probably going to be where I see if the risk to reward is going to make sense. It's probably going to be at like a 50 RSI. It's probably about right here. If I was wrong, it's going to be halfway of the washout bar. So I actually have more risk to the downside than I have theoretically to the upside. So it is a nice higher low V1, right, Jackson? If you're watching, you know, we went under the 1 ATR channel. We came back up in. Now we have a couple days down. We have a reversal. If this closed above 50, then yes, because then I'm going to go from 50 up to 70. But here at a 48.55, my theoretical profit target, initial resistance, is going to be at the 50. So it doesn't make sense from a V1 or from a risk to reward ratio. That's what I was talking about. Even though you have a good setup, doesn't mean just because you have a good setup, you'd immediately take it. You have to factor in the risk to reward. So nothing on GD. Well, I'm going to look back, see if it closes above 50. Of course, gold we have. I'm going to have to get out of this today with the 5 crossing back below the 20. I already have an order in for that to take place automatically, so I don't have to mess with it. Google, again, you know, good. What is going on here? I got a ghost in my computer. Google earnings, and looks like the market did not like. I mean, not too bad. It's down 2.33%, but you know, it was just high up here. You know, it was high above the 1 ATR channel. Did reject, closely rejected the 70 yesterday. Steve had a really nice trade on this, and like a pro, he got out in front of earnings. Right? He had a beautiful trade on this. I think he bought it somewhere around here, up to here. Got out because of earnings, and of course he would do that because he's a professional, right? And you should do that as well, not gamble on earnings. So way to go, Steve. Good call. You know, I'm going to wait for this. Now the earnings are out of the way. What is going on with my charts? I'm going to wait for this to come back in the value zone, see if I can get a V1 or V2 entry. Goldman Sachs, another nice trade from Steve. And I believe Jesse also with the 520 crossover. This was a nice move up here yesterday. I think Steve got out of it yesterday here, kind of started rejecting the 70, tried to go up again. But again, you know, you're getting close to a 70 RSI, you're getting close to a third ATR channel. 90% of trades, 9 out of 10 trades when they get up here are going to fail. So excellent trade on that, Steve. Nothing for me here. Again, we're way above the value zone. I need to pull back into the value zone and look for some kind of entry. IBB, this one is above the third ATR channel, and it's 69.92. So you can look at this and you can see already that it did reject the third ATR channel, or it did reject the 70. So nothing on IBB today for me. It's too high. Intel had good earnings, still very high, did reject the 70 RSI today. If I was long and held through earnings, I would be getting out of this here because it did reject the 70. And like Steve said, about 90% of trades reject that 70 RSI. So 9 out of 10 times is probably a good time to take profits. So nothing on Intel. Again, I need a pullback. Russell 2000, of course, we had on this break over the 200. This has been a nice trade. We hit one profit target up here. Looking for a rejection of the 70 RSI. This one's not quite, well, I shouldn't say that. It is actually quite overbought, everything considered. How high did it get today at the high? I don't think it got to 70. Yeah, it got to about 67. This is a discretionary trade. I mean, I could take this off if I wanted to. It's not up against the previous highs. It's still above the third ATR channel and it has not tested the 70. So, and I have so few shares of this left, so I think I'm going to go ahead and just see this one through, either rejection of the 70 or close back below. Johnson & Johnson. Oh, I'm running out of time. I'm going to have to crank. Nothing on Johnson & Johnson. Coca-Cola. Nothing on Coca-Cola. Although we are getting close to a double bottom with the divergence here. See this low down here? See how deep the MACD bars are? Then we have this rally. Now we're coming back down, but these MACD bars here are not very deep like these. This means momentum is starting to wane to the downside. Maybe, I'll take a look down here, but like the 100-day moving average. Lockheed Martin moving sideways. If I had a nice stab down tomorrow and then a huge rejection back up similar to this, I might get long that, but nothing now. MasterCard did have earnings this morning, initially gapped up, back down now. Okay. So this is MasterCard with the 520 EMA. Buy and hold really did much better than the back test of the 520 EMA cross, but it still had a 742% return. Boy, that's a little tough one. It's, you do have the 520, but you also rejected the 1 ATR channel. You also have a V1 to the downside. I guess technically this would work, but I think there's better setups today, but that 520 is legitimate. McDonald's finally having an up day. I would be looking to buy McDonald's if we could close back above the 30 RSI and back above the 250 day. That would give me a really good risk to reward ratio on a big stock like McDonald's. Altria has earnings coming up near the third ATR channel. I need to see it pull back. Merck had good earnings. I almost bought this yesterday. I thought about buying this yesterday and I didn't see the E down here, and unknowingly I would have gone into earnings, which would have turned out. But the takeaway here is always make sure when earnings are going to be. Microsoft had that big gap up. Now we've lost the low of the gap up day. That's not particularly positive. Netflix. Netflix does back test pretty well, guys, on the 520 EMA cross. It did better than buy and hold, and it had a less of a drawdown than buy and hold, 23,000%. And it has a 43% win rate. So all in all, it's pretty good. It's pretty good, and it did happen today. We have the 5 crossing over the 20. Looks like I am going to take this trade today. I'm going to take a half a position because it's under the 200-day, and also because we have the news tomorrow. So Netflix does look interesting. Nike, we were just talking about that. So we are. Looks like we've lost the 50 right now, but this is what I was talking back here, Frank. See the previous high. So this was resistance. Now we broke out. We broke out into this new box. Darvis style, but now we've come back down and we're finding some support at that previous resistance. At the same time, we're at the third ATR channel and the 50-day moving average. So this all looks good. I would need some kind of trigger though. Just that alone is a decent setup, but I don't see a trigger. A V1, a V2, something like that. Philip Morris, nothing there. In an uptrend, needed to pull back into value. PayPal lost to 200 today. Again, needed to pull back into value. And when I say pull back into value, I mean between the two green lines, the 1 and the -1 ATR channel. The Qs looks like it's accelerating to the downside. We have this on a 520 cross. Silver looks like the 5 staying over the 20, so I will be holding that. I have 5 minutes left. Had that very small loss on SPY overnight, but I will be buying that again. Bonds, really been selling off here. I want to see what happens when bonds get down to about this level, see if we can get a double bottom test. Looks like we do have divergence here. If I could pick this up with the 30 RSI along with the double bottom, along with the bullish divergence, I would take that, but not yet. Tesla finally going down a little bit, but nothing there. Twitter just has not moved since that big gap down on earnings. Again, a good example, guys, of not to hold through earnings. United Healthcare, very strong, too high. Oil down a little bit today, nothing there. VIX getting pretty, look, we're down here at the third ATR channel. We're getting very close to the 30 RSIs. So, you know, we might get a bounce here. I don't know. Verizon moved up nicely, moved into the value zone. If I get a couple more days of moving sideways or a V1, V2, I would consider that. Walmart, of course, that's the stinker for the day. I did take this V2, close below the washout days, middle of the washout day. But yeah, this was a stinker, unfortunately. So I will be getting out of that today. Energy, nothing really there. Financials, very strong, up at the third ATR channel. Off of its high, so it's too high there. Real estate way above the channel, then we actually closed below the channel. So now that we've closed below the channel, I want to see it move back into the channel, have a day or two down, get a higher low V1 or V2. Utilities, nothing there, and healthcare, nothing there. So it looks like, so let's look at gold. So gold definitely looks like the 5 is going to cross under the 20. I'm going to get out of that. IWM, the one profit target. Silver, 5 is still above the 20. I'm going to hold that. The SPY, buying that again overnight, selling it tomorrow morning. Walmart, going to get out of this at the end of the day, and the Qs, going to be holding that. So the only thing that looks like a potential today is Netflix with the 5 EMA crossing over the 20 EMA, 278.47, 277.74. Whoa, I almost lost the microphone. So I am going to be buying a 1/2 position or a 5% position of Netflix at the end of the day based upon this back-tested approach on Netflix and the 5 crossing over the 20. So, all right, I'm going to go ahead and just buy that because I have to buy it in a couple of accounts. All right. So I bought Netflix at 281.40, and we'll be selling Walmart at the end of the day automatically. We'll be buying SPY at the end of the day automatically, and we'll be selling gold automatically at the end of the day. Should be interesting to see what happens tomorrow. All right, so we have 1 minute left. I've got everything on autopilot here. Yeah, it's pretty good, Mount Doji. Sorry, I didn't see that. Yeah, it's pretty good. I mean, we have a nice V1 closing above the 50 RSI. Looks pretty good. Went outside the channel, came back in, sidewards movement, nice V1. Yeah, looks pretty good to me. You know, and if I were to buy this halfway of the washout bar, today's the washout bar. So a close below here would be my loss, and a move up to about here would be my reward. So it does make sense. Nice V1, sideways movement in the channel above 50 RSI. Sorry, Mount Doji, I got to that one a little late. Oh, Wayne, how's it going? Sorry, I didn't see that till right here. Yeah, McDonald's. What I'm waiting for on McDonald's, I'm waiting for it to close back above the 30 RSI. And if tomorrow, if we went back above the 30, we would also go back above the 250-day moving average. I've really been watching McDonald's closely here. I did buy McDonald's back here on the 23rd when it bounced off the 200, and it also went under the 30, over the 30. It gave me a good risk to reward. Unfortunately, next day it went against me. I had to get out, but you can see, good thing I got out, right? I didn't want to. I'm like, it's so low though, but that's what my signal asked for, and that's what I did, and it continued down. So, all right. So red day today, unfortunately, but that's how it goes, guys, right? We don't go up every day. But, you know, a couple days ago, I had a yearly high, so happy for that. Okay, so I bought SPY at 303.21. So the new SPY trade. 303.21. All right, we got out of gold. Got into Netflix with that 520 cross. We bought that at 281.40. So we got in it. Does it mean it's going to go up? We have absolutely no idea. But I do know if it goes tomorrow, if it goes down and the 5 crosses under the 20, most likely I'll have a small loss. And if we catch a trend and go up, then I'll have an outsized gain compared to my risk, right? So that's what it comes down to. Walmart, did get out of Walmart. That was a stinker. It just really collapsed, but we had a lot of sideways movement. It was going to break one way or the other, and unfortunately it broke to the downside. So that's a bummer on Walmart, but that's how it goes. And looks like we closed red across the board on the indexes. All right, so listen, I'm going to go through the rest of your comments. If you have any other questions, please let me know. Just real quick, going to put in my quick daily plug. Hope it's okay. Let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time. I do have a 10-hour course. It's one-on-one with me, 5 2-hour courses, or 5 2-hour sessions. I teach you everything I know that I've learned from some pretty famous traders and authors over the last 24 years. I really enjoy teaching. I've had good success with my clients. I really have. I've turned some real losing clients into winning clients, and really makes my day when I see that, to be honest with you. But you know, the course is pretty intense. You know, the format is I basically teach the first part of the lesson, and then, you know, I ask you to teach it back to me. We look at a lot of charts. I have you break down a lot of charts. Okay, give me the risk to reward, what's positive, what's negative here, and I really think it's the best way to learn, especially when I turn it around and you have to teach it back to me. And so, you know, if you're interested, I like to have an initial call. Just because you have a call doesn't mean you have to take the lessons, but I like to kind of have a little bit of an interview call. You can interview me a little bit, I can interview you a little bit, see if it's a fit. I like to know a little bit more about you, you know, how you got into trading, what your challenges have been, what your goals are, and then I'll put together a lesson plan, you know, using that information to hopefully help you achieve your goals. And like I said, I've had really good success. So if you're interested, my email is in the description of this video. You can just email me and we can just set up that free Skype call. It's about 30 minutes, 40 minutes. Or you can reach out to me on Twitter. So, you know, if you've been thinking about it, please let me know. And I think you will make a good investment in your trading career if you do that. And then lastly, if you like this channel, if you haven't subscribed, I would appreciate it. If you liked today's podcast, if you've learned something, if you could please hit the thumbs up button, I would really, really appreciate that. It does help Google or YouTube get the channel out to more people. And there's a lot of people out there that need help that don't really know basic trading principles, or they know a bunch of stuff, they don't know how to put it together. That's what I have found. So anyway, that's what I try to do here on this channel, is, you know, help you guys and try to put trading into context. So you know, you can help those people find the channel and help me by hitting the thumbs up button. If you could be so kind, I would appreciate it. So all right. JT, hey buddy, what's going on? JT says, hey Greg, 40 people watching. Oh, that's awesome. I wasn't even looking over there on that screen. That's fantastic. Is that a record? Could be a record. I'm not sure. Like I said, I don't really look at those so much, but that's fantastic. Thanks for letting me know. It's good seeing JT. Mountoji says, that's awesome. John says, jump to VIX. Okay. So yeah, VIX is something I've been watching pretty carefully here. You know, of course, if the indexes are up near their third ATR channel, they're up near the 70, very likely the S&P is going to be the opposite. It's going to be down at its third ATR channel. It's going to be down at the 30 RSI, because it's kind of an inverse to the S&P. So, you know, this just means that puts are inexpensive. There's not a lot of volatility in the market, but we are starting to form a little bit of a base down here. We are at the third ATR channel. We're very low RSI wise. So I am definitely watching the VIX here, but you have to be careful not to get suckered into these things, because a lot of times when they're low, they go lower, and you guys have been trading for a while. You understand that, just like Apple, right? I mean, Apple was high, but it just kept going higher and higher and higher. So, you know, you can notice when these things are really high or when they're really low, but my best advice is wait for some kind of signal. I always talk about having a setup and needing a signal to get into the market. So, you know, technically the V1 that we had yesterday could have been the signal. You know, went under the 30, back under the 30 ATR channel, back over the 30 ATR channel, and did have a V1, although up against a big bar. But in these kind of entries, you don't quite, you know, having a smaller bar would be better, but we also went under the third, back over the third at the same time. We had kind of a mediocre V1. So, and it is holding above the third ATR channel now. So I think the VIX is going to move tomorrow, John, one way or the other. Hey Murat, how you doing, bud? Thank you for checking in. Always great to see you. Always love to read your comments, and hope the doggy's doing well. Bing He said, I short EOG at yesterday's close with the V1 entry signal. Now price go up. Frowny face. All right, let's take a look. I don't even know if I want to see this. Okay, not as bad as I thought. Okay, yeah. I mean, listen, we do have yesterday we did have a V1 and a bearish engulfing bar to the downside. You know, if I would have shorted this being halfway of the washout bar, or yesterday's bar would be my close. And you can see today it did get above that intraday, but it did close below that. So if I would have taken this trade here, I would probably have stayed in, you know, because the washout bar was yesterday. Close above halfway would be my exit if I were short, but it did close under that as well. We did have a 520 cross here. You know, I don't do a lot of shorting. You know, the market is kind of made and has a tendency to go up. You have a lot of people benefiting from things going up, like the government and taxes and executives of the companies, but doesn't mean I never short. I mean, I shorted Walmart the other day, but I think I've made 4 shorts this entire year, so I don't really make a habit of it. But you know, if I was in this trade, I would probably still hold this trade because it was not able to close above halfway this washout bar. Giorgio, hey, how you doing, sir? Hi, Greg. Heard you on the Alpha Mind podcast. Oh, fantastic! Thank you. Appreciate you listening to that. Yeah, that's a great podcast. That even isn't it with Steve and Mark. And thank you for coming. I hope you keep coming back. Bill Richardson. Hi, Greg. Or hi, Bill. And then Bill says, "Hi, Greg. I have been holding onto GE shares purchased prior to the release of the bearish report. I've sold 60% of my shares. What are your thoughts on purchasing puts?" Going to earnings as insurance. Well, you're going to pay a lot for those puts because of the volatility involved with the earnings. And then when the earnings come out, the value of your puts are going to go down because the volatility is going to come out of the puts. And so if it's really going to have to go down a lot more than the market expected in order for you to initially start making money on those puts. I don't know. I honestly, Bill, unless you're doing this for tax purposes or so forth. I mean, obviously, I'm not telling you what to do. I'm just trying to give you the best advice, like if I were in this position, Bill. But I would probably, me personally, unless you have some tax consequences where you don't want to sell the stock, I'd probably just get out. I would just get out. But I don't want to give you advice on that because that's pretty specific. But I just kind of want to, pretty specific question. I don't want to give you advice on that. I just kind of want to tell you the pros and the cons. So if you do buy the puts, you're paying a lot for them because of the volatility involved in the earnings. And then when the earnings come out, the volatility is going to come right out of the put prices. And if it really crashes, yes, of course. But I guess if it were me, I would just sell before earnings, honestly. I think that's the safest way for me. But I don't know your particular situation with taxes or something like that, so I don't want to be too specific in my advice. Murat says, this is Google's third top, and every time it is hitting and falling back. That's a good point. Yeah, not symmetrical tops. We had this top over here. Then this high here didn't test it, but this high today did test that top. Good call. So this is, what's this called? This is called a false breakout to the upside. This was the previous high, the previous range. We broke out, and now we're back in the range. And that is not a great price action. Linda Raschke, if you guys know who Linda Raschke is, she has a book called Street Smarts. And one of her approaches is called the turtle soup, and turtle soup plus one. And what you need is a breakout, and then within the next 2 days you have a close below the previous high. And this is exactly what happened. Here's the high. We broke out. The very next day came down, closed below that high that was at least 4 days ago. I'm doing this from memory, but that would be a turtle soup to the downside, essentially a false breakout to the downside, which is not too great, actually. Steve says, yes, I got out of Goldman Sachs with a 5.03% gain and Google 4.13. Yeah, Steve killed it. Steve took, I think it was here. I can't remember. I guess I can find out. Okay. So it was here that he took it with the 520 cross. And he stayed in it like a champion and got out yesterday at the close before earnings. And if it would have gone up, he still would have been happy. I promise you. Steve's not going to hold through earnings, right? He's a smart guy. He's a professional stock trader, and he doesn't put his capital at risk for a gamble. So congratulations, Steve. And yes, on Goldman Sachs, that was a fantastic trade as well. Really, really great. Really great from here up to, and I think you got out yesterday. Yeah, I think you got out yesterday when we started to run up against this previous resistance here and couldn't push higher than the 70. So fantastic. Proud of you, Steve. Mount Doji, I'd like to hear your thoughts on engulfing V1 on KIE whenever you have a chance. Oh, that's the one I looked at, right? Oh, give me one sec, guys. Katie wants in. There you go. It's freaking snowing outside, guys. It's cold. It's snowing. I'm going to have to go tromping around in the snow today. Put on my boots. Look like a moon man out there. So yeah, I did like KIE. I mean, you know, you ask if you needed more sideways movement. Well, we went above, we came down, we did move sideways here. We didn't have a V1 here, but I mean, you do have here 2 days of sideways movement, but I do like it. I do like it. And notice Jackson, see how we have the V1 to the downside? Yesterday, we had a V1 to the downside. That's why it painted the little green triangle. And the today went above the day that had the V1 on. So here's a high. We take out the high but close lower. If the next day you close above that high, see, this is very bearish. But if you have something very bearish that immediately gets reversed to the upside, that's bullish. And that's why it painted that green triangle. In addition to that, you have a bullish engulfing candle. You have a nice V1. You closed over the 50. Yeah, I like it. Did you take it, Mount Doji? Okay, and Wayne, we looked at McDonald's. Yes, I've been really watching McDonald's as well. It's, you know, one of those ones where like, why is this so low? You know, I want to wait till we get the signal. The signal is a close back over the 30 RSI. And if that happens, you'll also have a close back above the 200-day moving average. And that would be my signal. Does that mean it's going to go up from there? I don't know. But I do know that it gives me a theoretical good risk to reward. You know, Mark Douglas in Trading in the Zone talks about when you go up to a slot machine, and I hate to relate trading to slot machine, but there are some similarities, guys and girls. But, you know, when you go to a slot machine, you put that dollar in or whatever you put in that slot machine and you pull the handle, you know something's going to happen. Do you really expect to win? I mean, honestly, I used to live in Las Vegas. You really expect to win when you put the money in? Maybe if you're super optimistic, but if you're realistic, you probably go, I'm going to pull it. Things are going to spin around. I don't really expect to win, honestly, but then sometimes you win, but then other times you lose. But it's the same thing with the trade. You know, you find the trade, you put in your money, you pull the handle or you click the button, and it's either going to go up or it's going to go down. So now look, your odds in trading a lot better than with the slot machine, because in trading you can wait for a good edge. You're never going to have an edge in playing the slot machine. But you know, the point is you place your trade, you don't get too emotionally involved in it, and you see what happens. And if it goes your way, you have to have the strength to hold on to it and let it breathe to a point, right? So that you have potential for a big reward. But if you're wrong, you have to get right out. KIE was resisted at 3 times around 35. Yeah, it was rejected there. On July 15th and July 26th. July and October 21st. I wouldn't really look back too much back in July. That's a little too far away, I think, to really have a lot of relevance right now being he. But yes, of course, this one is pretty recent. Actually, 30 days in the past is, to me, is the most relevant. But, you know, the point is here that, yes, I mean, even if we do, even if that is going to be the resistance, does it give us a decent risk to reward? And it does, right? If tomorrow, I don't know if Mount Doji took this or not, but if he did take it, theoretical risk down here, 0.61%. And if that is the the resistance point, it's 1.39. So it's greater than 2 to 1. So it does make sense. Let's take a look at the weekly. Weekly's in the value zone. I like that. Monthly, okay, so this is triple screen. This is Dr. Elder triple screen. Monthly, you're in a nice uptrend. The long term, the longest time frame monthly, you are in an uptrend. On the weekly, you are back in the value zone, which is fine. That makes it a good place for value on the weekly. And then on the daily, you need some kind of trigger to get you in. It gets you in quicker into the weekly time zone in this going up. Hope that makes sense. But anyway, I like that trade. I really do like that trade. Mount Doji's had some really good V1s, V2s lately. Jackson says, I hope that helps, Bingy. Jackson says, Greg, when you bought Netflix, do you gauge your profit targets from what you bought it at or the closing price? Just checking for my script. Always, yeah, we haven't got into that yet, Jackson, on our lessons, but I always do my profit targets based upon where I bought it. But see, that's not really what you're asking. You're asking, let me make sure. Well, again, Jackson, I always buy at the end of the day, right? So essentially the closing price and my entry price are going to be the same. But how do I answer that? Probably just the safest way there is just to say your entry point. Yeah. But because I buy at the end of the day, they're going to be exactly the same, right? I mean, this is off by a little bit. You know, I bought it at 281.40 and it's 281.21. So, but you know, the way that I look at this, Jackson, is that, look, the 5 crossed over the 20. Is it going to be a winner? I have no idea. But it did happen in the value zone. So if I'm right, I could be right, you know, potentially up to here. If I'm wrong, I potentially maybe just down to here. So it does make sense. I hope that helps, Jax. Okay, so Bing He is still holding on. Chris, IV will be highest right before earnings. That's correct. How you doing, Chris? Good to see you. IV, guys, implied volatility. So, you know, back to Bill asking about GE with this puts. So yeah, you know, you're going to be paying the highest price for volatility right before the earnings, and that's going to come out after earnings. Merritt says, Greg, Google go back until July 2018. Oh, is that what you were talking about? The third high? Okay. Bill said, I would not be able to trade in the manner that led me to this long hold. I did end up getting out. I've been working my way out of the shares for a while, trying to minimize loss, which I have for the most part. Okay, good. Yeah, GE's been a tough one. A lot of sideways movement here. You know, you guys know when we have sideways movement, eventually that's going to lead to some big moves, either to the upside or the downside. I just don't know which way, and earnings might be the spark to show us which way it's going to be. Jackson says, I have the same green triangle. I noticed that when Mount Doji brought it up earlier. Good. Glad that you're noticing that stuff. Mount Doji says, yep, I scooped up position in KIE. All right, well, let's watch that tomorrow for Mount Doji. I like that a lot. Honestly, Mount Doji, if I would have seen that before the end of the close or we're at time, I would have bought this today. I mean, triple screen, monthly is up, weekly back into value, which is good. That means, you know, look for a trade on the daily, and that is the trade. That is the trade. So next time you got to share those earlier, Mount Doji. It's not your fault. You may have shared it. It's just that when I'm going through the charts, I can't go back and forth on the screen, so sometimes I really can't see what you guys are saying until later. Netflix, so it's very close, yeah? On Netflix. Yeah, it's close. I mean, it's very close, the closing price to where I bought it. But remember, I generally buy right at the end of the day, so my entry point is going to be the close of the day. Beyond Meat, what's going on with Beyond Meat? Oh my goodness. What is happening? Remember all the people that lost all the money on the shorts up here? It was at $233. Now it's at $89. My goodness. I know that this was heavily shorted, and I know shorts got really beat up. But look at that. It's down 22.22% today on earnings. Unbelievable. Again, good way to lose 20% overnight. It's to gamble on earnings, everybody. Yeah, Tesla's been pretty amazing, hasn't it, Frank? That's been another short killer. Oops. I think Tesla's the most heavily shorted stock in the market. I believe I've read that somewhere. So I think shorts lost over $1 billion on shorting this stock. Good pick, Mount Doji. Jackson says, yes, I agree. Merritt says there's absolutely no meat left, just the bone. Yeah, that's brutal. All right, everybody. I'm going to get out of here, put on my hiking snow boots, go up in the mountains, like that movie, The Thing. Put on my big coats, going through the flurry of snow. I should be going to Guns N' Roses tonight is what I really should be doing. They're here in Salt Lake City, but I'm not. So anyway, Merritt, good to see you. Thank you for coming by. Jackson, good lesson last night. Watch those videos. Glad you're reading the book, The Rule, and look forward to our call tomorrow. Frank, nice seeing you. Thank you for coming by. I appreciate it. Mount Doji, good seeing you. And let's hope that KIE goes up. Really hope it does, and we'll be watching it. Bill Richardson, hope that helped, and we'll see what happens with GE, right? Chris F., thank you for that comment on the implied volatility, and thank you for coming by. Bing He, good to see you, my friend. Have a good day in Singapore. Wayne, nice to see you, sir. Hope that helped on McDonald's. Looks like we're both keying in on McDonald's. Steve Burns, always a pleasure and honor to have you here, sir. Excellent trades you've had lately. And I think you made an all-time equity high yesterday. So congrats. That's a big day, big milestone in our industry. So congrats to you, Steve. And thank you for coming by and everything that you do. Giorgio, thank you for coming by, sir. And thanks to Alpha Mind for having such a great podcast. And if you guys want to listen to good podcast, Alpha Mind Podcast, you can find it out there wherever podcasts are. But they interview traders, different kind of traders all over the world. But appreciate you coming by, Giorgio, and hope you keep coming back. Hope you found it helpful. John, good to see you, sir. We'll be watching the VIX for sure. JT, good to see you, my friend. Hope you're doing well. Let me know what's going on with your trades. SH, oh yeah, thank you for coming by. And how does one draw an ATR channel? Remember, you go into your charts, and it's either under, the indicator is either under ATR channel or a Keltner channel. And then you do 3 Keltner channels. I use a 20 period as my input for each channel, like 20 and 1, that's your one ATR channel. And then 20 and 2, that's your second ATR channel. And then 20 and 3 is your third. And by the way, I use SMA, not EMA. So I hope that helps, SH. Let me know if you have any other questions. And Frank, it's not so much FOMO as a slim pickings. It is very slim pickings. And it's a good point, Frank, that if there's really nothing there, just sit on your hands and relax. Wait till something good happens. Marco, good to see you, my friend. If there's anything I can help you with, Marco, you just let me know. And I appreciate you coming here every day. And never feel like I help Marco with anything. So if there's anything I can help you with, buddy, you just let me know, okay? And Kurt, thank you, sir. Sorry about that with ATF there, but I couldn't get those. Please keep in touch. I want to know how you're doing. I want to know what's going on with your charting. I mean, with your trading. But I'm glad you're being patient. Johnny, good seeing you, my friend. Looking forward to some other trading reports from Johnny. Johnny always has a good one. And John, thank you, sir. Appreciate you coming, John, as always. And Jackson says, like guys also, this is a gold nugget for our education. Let's support Greg. Thank you. Thank you, Jackson. Yeah, if you guys haven't hit the thumbs up button, I would appreciate that. So Jackson says 80.6 degrees Fahrenheit here, mate. I like the warm weather, man. The hotter, the better. I'm not that much of a cold weather person, although I do hike around in the winter every single day up there. So anyway, maybe I'll see some cool wildlife or something today. That'd be good. Okay, everybody, have a good rest of your day. Thank you so much for coming. Go out, do something nice for somebody today, and make their day, and it'll be good for you too as well. And hopefully we'll see you tomorrow in the last hour of the market. So take care, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.